Welcome to The Upside. I'm your host, Tamara Radachai. Today's episode is all about what the Reddit community wants to know. Once a month, Fidelity Canada hosts the Reddit Ask Me Anything, or AMA, session to build our online community, answer questions, and keep the conversation going. From portfolio managers to experts in various areas of the business, the Reddit community asks and we answer. Today we're here with Audrey Kim, Senior Investment Analyst for ETF Capital Markets. In today's session, we'll be readdressing and diving deeper into some of our top asked questions from past Reddit AMAs focused on ETFs and early investing journeys. Audrey, welcome.
Hi.
Welcome back to the studio.
Yes, so excited to be here. Thanks for having me. It's always such a good time sitting down, chatting.
It is always a good time. So let's start things off just with a quick intro of who you are, what you do at Fidelity, and your favorite part about being at Fidelity.
For sure. So Audrey Kim, like you said, I work on the ETF Capital Markets side here at Fidelity. And what is ETF Capital Markets? To be honest, it's just a fancy way of saying the ETF Capital Markets role. It's your job to be the link between all the participants in the ETF ecosystem. So how I like to say it is, imagine a spider web, the ETF Capital Markets role being in the center of that spider web, and you web out to all these different stakeholders. So internal clients, external clients, market makers, traders, exchange representatives, and then of course, legal compliance, et cetera, to make sure that the ETF business is smoothly functioning here at Fidelity.
Love that explanation. That's great.
Favorite part of the job?
Yeah.
There's many different things, not to sound super cliche, I think, but I have to say it, no day is the same, which makes the job really, really exciting. A lot of complicated situations or complex situations arise in my partner's role, in my role, and I think it's a lot of fun to be able to take a complex situation and find a solution for it, and make sure that everybody who touches or has an experience with Fidelity anybody who touches or works with Fidelity ETFs has a good experience with it. So that makes the job really rewarding and exciting.
Amazing. So like I said, we do a monthly AMA on Reddit.
Yes.
And
So fun.
You just hosted our most recent one, which was our 30th episode.
Amazing.
So why do you think that it's so important to keep the conversation going online with Reddit?
Oh, I mean, there's many reasons, but like the first one that comes to mind is Fidelity Investments Canada is one of the top asset managers in Canada, right? And because of that, we're so fortunate to have a ton of subject matter experts, a ton of resources, and for that reason, a lot of knowledge to share. And as you know, there's tons of information floating around online, and we want to make sure that we can contribute accurate, timely, and information in a way that resonates with that community. And we know that we have the resources and knowledge to contribute to financial literacy. So we thought that Reddit AMA was one way we can kind of do that.
Yeah, and we want to meet people where they are, right? People
Exactly.
are in all different parts of the online ecosystem.
So
for
sure. I mean, how naive would it be of us to expect people to come to us for that information? Right. Like you said, we want to make sure that we meet where they are, not expect them to always come to us. So Reddit was one of those platforms that we felt was a good space to join.
Great.
Yeah.
So let's dive into the questions. These are some of the top asked questions that we've got in previous Reddit AMAs.
Okay.
So we're going to ask, and you can answer as the questions come in.
Okay, I'll try my best.
As a solo investor, do you believe that time in the market beats timing the market?
Oh my gosh, say it with me. Time in the markets beats timing the markets. And that's not to say that if you have a good entry point, you get a little luck with it, that you may or may not be better off. That being said, generally speaking, for the general public, it is just so much easier and you'll probably have a better, more consistent outcome if you just focus on a long-term perspective and take a long-term perspective and have time in the markets instead of focusing too much on what's my entry point, what's my exit point. Taking a long-term approach will help you stay on track and staying invested is what's going to help you reach your goals sooner and more consistently.
And when you say long-term, how long are we talking here?
You know what? That really depends. It really depends on when the next goal you have. So I would say, for me, my perspective is, at least 3 to 5 years is kind of the long-term perspective you want to take. But again, that depends on how far out your goals are. Sorry.
Great. Okay. Next question. If you and your investments are both based in Canada,
Okay.
should you invest less in the Canadian market in order to reduce risk?
That's a great question. A good way to think about it is if your income and your portfolio is exposed to the same market, naturally you're going to be less diversified, right? So that's always something to think about. You always want to consider, hey, am I in, I'm going to pretend my friend, whoever, invisible friend here, has a tech job. Let's just making this up. This person's income is coming from the tech world or a tech firm. That's where he gets his income, a tech industry, but his portfolio is 100% invested in tech. He's overexposed to the tech sector. I know we're talking about Canada in this essence, but it's still the same point, right? So naturally, if your income and your portfolio are overlapping in the same type of exposure, you are going to be naturally less diversified. And not to plug in my favorite ETFs here, it just feels right to only talk about all-in-one ETFs. Mm-hmm. All-in-one ETF, and Fidelity offers these all-in-one type ETFs. The diversification is already done for you. But not only are you diversified from a geographic standpoint, you're diversified from a strategy standpoint. So the building blocks underneath are a mix of an active strategy, a strategic beta strategy, a systematic strategy. You're also diversified from a factor or style standpoint, all in one ticket, really easy.
Mm-hmm. All right, next question.
Can you tell I'm excited to talk
Yeah,
about
of course. Love it. Love the enthusiasm. So the next question is, how badly is short selling hurting the economy? But I think I would rephrase that and just ask, is short selling hurting the economy?
You know what? We actually get this quite a bit. And obviously there's a lot of nuances to it, but generally speaking, short selling can often, get a bad rap. But really short selling is actually a healthy part of an economy. It contributes to liquidity, price discovery, helps with overpriced securities. It's all part of a healthy functioning market. I think that being said, you always want, with anything else, you always want to understand the risks before you get involved with it, because it is one of those things that it can lead to, some losses if not done incorrectly, or there's definitely some risks associated with it. So you definitely want to do your homework, understand why you're shorting. But it's not like it's a bad practice in any sense. It's definitely a healthy part of a functioning market. Yeah,
I was going to say you should definitely know what you're doing.
Exactly.
If you're going to get into something like that.
Exactly, yeah.
All right, next question from Reddit. Is managing and owning individual stocks worth it compared to just owning an index ETF? And how much more beneficial could it be if you managed your own portfolio?
Oh, I do remember this question. I think we did this one at the last AMA we did. And I think I said something like, it really depends. And it's true. Like, are you the next Warren Buffett? Right. Or are you just like, the average investor? And if you are, congratulations. And that's amazing. And that's not saying there's some, people out there that are very good with being a stock picker, or they have a lot of time and resources to put a lot of energy and time into stock selection. That being said, it's not easy. It takes time. It takes a lot of research. So I think probably the best way to answer that would be like the simplest way to approach it is just, find something that works for you, that gives you a broad exposure to whatever sector market that you're looking for. Something that has, automatic rebalancing built in, such as the all-in-ones. It really, at the end of the day, it really depends. I'm sure there's a little bit of sprinkle of luck involved in it, but definitely a lot of time, a lot of careful research in order to be able to be your own stock picker. So ETFs is a great solution for it, and that's why we've seen such growing demand for ETFs in the Canadian landscape. That's why a lot of people resonate with ETFs.
That's a great segue into the next question. How are Fidelity ETF offerings different from comparable competitors?
Oh, okay. Well, it depends on the ETF, but I'll pick on all-in-ones because that's the one that's been on my mind recently. So all-in-ones, really the key differences comes from what's under the hood. So there's a few different issuers out here in Canada that offer all-in-one ETFs, Fidelity being one of them. What makes Fidelity's all-in-one ETF stand out is when you lift under the hood, how it's constructed, how it's built. It has a few more bells and whistles, and a good example would be our all-in-one ETFs automatically rebalance annually. So every year, the rebalancing is taking care of you so that you stay on track with your investment goals and your risk tolerance. But additionally, as you know, markets are fluid. Markets can, go for a run. Sometimes they can detract, and that can kind of naturally shift your portfolio. So what we've done is we've, thought about that in the portfolio constructions. We've also, on top of the annual rebalancing, we put in these plus or minus 5% bands that will trigger a rebalance in the event that the asset mix deviates or drifts plus or minus 5% from its original neutral mix. So that's one of the kind of unique features. Again, the way it's built, ours are built by, it includes, active management, systematic, strategic beta factors, which is kind of a unique way that we built ours. And then our all-in-ones, another unique feature, has a little bit of crypto exposure. So it ranges anywhere from 0.5% exposure to 3% exposure, depending on
The ETF.
the ETF, how aggressive or conservative the ETF is.
Great.
Yeah.
Similar vein for the next question. How does Fidelity intend to compete with others in the Canadian ETF space moving forward?
That's a great question. And maybe a good place to start would be, how did Fidelity enter the ETF space? So we actually first launched our ETF business back in September 2018. And we started off by launching a dividend suite, a dividend factor suite. And the reason for that is Fidelity's bread and butter has always been active management. That has always been our powerhouse and always our strong suit. So instead of straying away from what we know that we do really well, we doubled down on what we know that we can excel at, and that was active management. So we went a little different and went kind of a smart beta route and launched a dividend suite. Fast forward, we rounded out our factor shelf with high quality, low vol, momentum value. Then we kind of launched a few active fixed income, more active ETFs, kind of got into a covered call space later on. But what makes Fidelity competitive is we lean into what we're really good at. We don't just try to replicate what other people are doing. We always are continuously reviewing our product shelf to see, is there room for improvement here? Is the market or our clients asking for something different? Is there anything else that we need to make this lineup fuller or the shelf more well-rounded? So we're always reviewing and thinking about our product shelf, which helps Fidelity stay competitive.
I know we're at 52 ETFs.
Yes,
moment, right?
52.
I'm sure more on the way.
52, and definitely the shelf is growing. Yeah, along with the industry.
Yeah. So this is a pretty big question.
Okay.
If another rapid stock market crash were to happen, what would happen to the price of covered call ETFs?
So you said rapid decline. With a covered call ETF, it includes essentially a short call option. And what that short or writing calls does is it allows the ETF to collect premiums, which will kind of act as a buffer or a cushion. So in the event of a market drawdown, the covered call ETF will experience less of a drawdown than a 100% equity portfolio. That being said, an extreme market downturn, like obviously both ETF will have a downward trend. That being said, if we were to compare covered call ETF versus just 100% equity portfolio ETF, the covered call ETF will do slightly better due to that kind of cushion from the short call position.
Okay, great. And just looking to future Reddit AMA sessions.
Okay.
To those who might want to submit a question and talk to people at Fidelity, from your perspective, what should they not be afraid to ask?
Oh, that's a good question. I think just don't be afraid to ask anything. Asterisk, anything as in a decent, appropriate question. Don't be afraid to ask a question that you think you should know the answer to, because chances are there's someone out there wanting the answer to the same question you're thinking about. And when I say Fidelity truly cares about this Reddit AMA program, they really do. And so, like Tamara, I know you put a lot of effort into making this program robust, and we actually take your questions and do our best to answer to the best of our abilities. So any question, fair game. If there's something you want to know, if you think it's too simple to ask, don't worry, just ask it. Worst cases, we'll do our best to find out the best answer we can provide you, or find our way around it. Just don't be afraid to ask any questions.
Great. And what's a question that you would ask if you were an anonymous attendee at a Reddit AMA?
You know what? I think I would ask, if you're to tattoo one of the Fidelity ETFs on your forehead, which ticker would you tattoo? And I think for me, it's FEQT. I know, I love talking about all-in-ones. It's such a good ETF because it's such an easy way to stay invested. It's such an easy way to get, start investing. It's such an easy way to have your money work for you without spending too much time on it. But I would ask the question because I'd be so curious to see which ETF is resonating with one of the ETF team members at Fidelity, and I would like to hear why, right? See why they're excited about it, but kind of a silly question.
It's a fun question for the product team, right?
Exactly. It goes back to your earlier question. Don't be afraid to ask anything, you know? Yeah.
Well, thank you so much for answering all of our questions today, Audrey.
Yes.
It's been such a pleasure.
So fun. Yeah. Thanks so much for having me.
Thank you for joining us on today's episode of The Upside. If you're curious to dive deeper into our Reddit discussions, you can find us on the Fidelity Canada subreddit. You can also head to fidelity.ca's investor education section. Whether you're learning investment basics or looking for a more advanced knowledge, we can help you become a more informed investor. You can check out articles, sign up for the Upside newsletter, get information about upcoming live webcasts and on-demand videos. For even more content, you can explore Fidelity Canada on YouTube, LinkedIn, and Instagram, as well as our Upside and Fidelity Connects podcasts with new episodes dropping daily. Once again, I'm Tamara Radachai. Thank you for watching, and we'll see you again on the Upside.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.